So welcome to another edition of performance management, right? This will be our last lecture this week. Hopefully we can round up our variance analysis, right? Um, so in today's class, we'll start with the definition of standard costing because you need to understand what is standard costing, right? As well as standard cost card or standard cost card. Yes, standard cost card. Now, what is standard costing? Right. Standard costing is a control techniques which compare the standard costs and the revenue with the actual results to obtain variances which are used to improve performance. Plus, the standard costing is like your budgeted, right? So when you are comparing, when you compare your standard cost and the revenue with the actual results. And that will result to what we call variance. Right? And this variance could this could lead to improvement of performance because you want to know if you've actually meet up with the targets by comparing your standard with what with your actual results, right? And that is what standard costs class, and that is what we call standard cost. We illustrate that. A standard cost is a predetermined, you could say it is predetermined estimated unit costs, right? Now you will see in the question, you'll be given 5 hours, for instance. Let's say 5 hours, 5 hours per unit. Let's say 5 hours per unit. Then the rate, I'm talking about standard now, 5 hours per unit, and the rate is 2 naira per unit, right? When you multiply 2 times 5, you have 10 naira. So that 10 naira that you can get, it is what you call standard cost because it is unit cost. Class, let me come again. Now, let's say for instance, in your standard card, you have 5 hours per unit, and the rate is 5 naira per unit or 2 naira per unit. If it is 2 naira per unit, when you multiply 2 naira per unit times 5 hours per unit, right? We have you have what 15 naira per unit, and that 15 naira per unit or two times that is 10 naira per unit, right? And that 10 naira per unit is what we call standard cost. That is the costs, right, per unit used for what inventory valuation and control. Why a standard cost card shows full details of the standard cost of each product. Class, what is standard cost card? The standard cost card will show which the standard cost card will show the total cost, the full cost. Let's say, for instance, you have direct labor, right? 5 hours per unit, 5 hours per unit, you have the rate, you have the cost, you have the variable overhead, you have the fixed overhead. Now, in that space, that is what we call standard cost card. We will get there, right? We'll get there. Now, uses of standard costing, can you see it? It's used for valuation of an inventory. When you want to value the inventory, either using marginal costing or absorption costing. Now, it will be clearly stated that the company operate on marginal costing. So you should know that, oh, if it is marginal costing, it means that when you want to value your inventory, you use the variable cost, right? And that is your closing inventory though. Then when you want to value if the question says okay, they operate on absorption costing, you should know that, oh, absorption costing is what? Is full cost. We'll get there. So, and types of performance, right? We have type of down standard. There's what we call ideal standard. There's a standard that believes that there's no idle time, no breakdown, no wastage, which this type of standard does not even exist, even in practical, right? Even in what? Even in what? In practical. They say there is no, it is likely to have an unfavorable, it is not possible. So attainable standard are standard that can what? Achievable, right? The current standard are the current ones you are actually using that gives room for working condition, current wastage, it is based on what? The current activities. Now, why basic standard is what, when you look at civil servant, for instance, you see that some of the standard they are using is what we call basic standard because they don't want it to be altered, right? They don't want it to to be altered. So now, don't forget that I defined the standard costing, the differences between the standard cost and the actual, which results as variance. Now, in this case, this standard costing will take us to what we call variance, right? And the question is, what is variance? Variance is the difference between either the budgeted or the standard cost and the actual cost involved, right? And this variance could be what? Could be favorable or adverse, right? This variance could be what? Favorable or adverse. You tested the standard that you want to achieve 250,000 units. At the end, when you want to 2,000, you want to work for 20,000 hours. At the end, you end up working for 10,000 hours, which is below the standard. Right? You say this is an adverse variance or unfavorable variance. However, variance can be divided into the material cost, the material variance can be divided into direct material, the labor, the variable overhead, the sales variance, as well as what? The fixed production overhead. Class, I don't have any formula here, but the formula that we use, right? Let me ask someone here, what is his or her genotype? Olalekan, what is your genotype? Is it AA or AS? What is your genotype?
A.
Thank you. Another person, let's say another person AS, another person SS. So that is what we use as our basis of our formula. You don't need to cram any formula. I'm not a fan of all those things, right? So I have my way. Usually I have my way for all those things, right? So now, I don't have any formula to give, but guess what? When we start, you will understand these things. Now, let me do some analysis for you, right? So that you take note of that. Under the material variance, right? The material variance is divided into two, into three, right? There's what we call the material price variance, the material usage variance, and the material cost variance. You see, the material cost variance is the addition of both material price and the usage. We give you what? The material cost variance. Now let me come again. Under the variance, right? There is material variance, there is labor variance, there is variable overhead variance. Now, under the material variance is divided into two, right? Material variance is divided into what? Two. Let's say material variance is divided into, let's say three. Number one is material price variance. Material usage means the quantity that you use. Variance, material price means the price that you set. Class, understand this thing, oh. I don't have any formula. The only formula I have is for you to understand the formula, right? That is the only thing I have. Material price is you are comparing your price, your standard and your actual. Material usage, you are comparing your consumption, what you consume, right? During production, usage, your standard and your what? Your actual. Then the lastly is material cost variance. So the material cost variance, when you add your material price and your material usage variance together, it will give you what? It will give you what? It will give you material what? Material cost variance. I pick it from material variance. Right. Class, am I communicating? Am I communicating, class?
Yes, sir.
Okay.
Yes,
So,
sir.
so if this is established, Now let me give you okay, let's do something. So if this is established, we can have something like this. Let me draw a diagram here if it will be possible. I thought I could use board, but unfortunately there's no power. Let's see. I want to give you, we say someone is AS, right? And AA, as well as we look for AS and SS. Oh, this thing is not moving. Wow. I think I have to stop the recording because I want to check something here. Oh, I have to stop the recording. I have to stop it. So let's say I want to draw something here. Let's say um AA and AS. Would this work? I want to draw a diagram here. Okay, this will not work. Wow. Okay, let's try it. Let's check it out. Class, just pay attention. Whichever way I draw it, right? Just need to manage it like that. Um, uh, coming. Hey, let's say we have AA and we have AS. Okay. AA, AA, and AS. This is too large. Hmm. So this is, we have AA, AS, and SS. So let's say we divide it into three boxes. Okay. Let's say the first one is AA, AA. I thought I could write on this, or should I erase them? Okay, let me see first. AS, right? AS, AS. Then, lastly, SS. Now, please, class, pay attention to this. So, if you know it, you know it. Right. Now, in this, I want to draw another diagram. Don't forget that material variance is divided into three. The material price and the material costs. Right? Okay, let's see how it goes. Uh, Calvin, I'm drawing something. I know it will work out. Sorry, I wanted to use board, but it's not working the way I want. Okay, so this is what we have here, right? So we can say, so this is material price, this is price, right? AS, class, please pay attention. AS, right? AS. Now, when you want to determine the formula, class, I've established that material price is price. You compare the price the standard and the actual. Now, instead of you stressing yourself on the formula, you could use this as AA, AS, and SS. Now, if you match AS to AA, we give you the material price variance. Now, you could say the second part of it, I can move all this. I can move all these parts. Yes. I can move all these parts. Just a minute. Okay, okay, sorry. So I can move these parts to this, right? Uh, then D, I can have this here. So just observe. Now, this will give us material usage. Now, which means that class, when you want to do your material price variance, you compare your AA, AS, and what? AA. When you want to look for material usage variance, usage means consumption. Then you do what? If you want to look for the usage, you compare your SS to AS. Can you see the movement? The first movement is AS to AA, that is material price. Then the material usage class will be SSAS. Now, let's bring out the formula. Material price is for pricing, right? Is for what? Price. So, in that case, I can bring out my AS. You can say AS minus AA. Class. AS minus AA, right? And don't forget that this is price. This is material. You go to the market, you want to buy a material. That is quantity. Then there is a price attached to it. Is that not so? So in this case, I don't know if this will work. QP. I guess, can this work? Haha, interesting. Uh, okay, okay, okay. Just a minute. I'm just trying to make it. I want to make the formula so simple. If it will work out like this. Let's say Q. This will be Q, right? Let me see if I can reduce this. Coming. Just trying to make if this will work out. Or should I use Excel? I've already started this already. Okay. Okay. Let's use Excel then. Let me use Excel. Because of the power. Because of the power. Okay. I just have to 15 that. Okay. Let me use Excel. Just a minute. Excel. Excel. Hello, class. I want it together.
Yeah, sir.
Okay. That's fine. We are still together. That's fine. Okay. Thank you. This, let me use Excel for this. Open new page. Okay. I have to share my entire screen, right? I have to share my entire screen. Uh, just a minute. That's good. Okay, material price, I can copy this material price to Excel, right? Let's say we are in material price variance, right? Material price variance. So we said we want to have material price variance AS minus AA. Now, in this now, right? That is ASAA. Okay. Now you can have, since it is material is quantity and the price, right? You can say QP raised to power QP, and this will be also QP class. So therefore, you can see A we go for the Q, S we go for the P, A we go for the Q, and A we go for the P. So therefore, we can have actual AQ is actual quantity times SP is the standard price minus AQ, that is actual quantity, times AP is actual price, right? You can decide to use it this way and say actual quantity times the standard price. SP is the standard price minus the actual quantity times the actual price. Now, you are comparing the actual and the what? And the standard. Now, if you don't want to use this, you can say, or you can expand this and say, okay, AQ is common, right? Actual quantity is common. Is that not so? Actual quantity is what? Is common. AQ is actual quantity. SP is the standard price. AP is actual price, right? Now, in this case now, you can decide to say, oh, AQ and SP. Now, AQ is common, right? You can decide to say standard price times the actual price, right? Minus actual price times actual quantity. Why? Because AQ is common. Just pick one, right? Then standard price minus actual price. Because you have to compare your standard and your actual. That is the standard price of the material minus the actual price of the material. Class, am I communicating, please? Hello?
Yes, sir.
Okay. What of others? Am I communicating?
Yes,
Yes,
sir.
sir.
Now, let me quickly go back to how we derived this. We said, someone said is AA. Maybe Mr. B is AS. Mr. C may be SS. Now, the material price is divided into two, right? Material variance is divided into three. The last one is material cost. And I said the addition of material price and usage will give you the material cost variance. Now, you said AS, match AS to AA. We give you the material price. And that is what we did there, that AS and AA. So because it is material, you compare your quantity, you raise it to power quantity and price. Because it is material and price, it is quantity, right? It is what? It is quantity. And that is why we say, oh, actual, raise it to power actual quantity times the standard price. You can see AQ, that is actual quantity. SP, standard price. AQ, actual quantity, and AP is actual price. So you can use this, or you say, okay, let me simplify it. You say, okay, what is common here is AQ. Bring AQ outside and say, okay, standard price minus what? Minus actual price. Now, if this is established, class, if this is what? If this is established, uh, let me save this. Let me quickly save this so that right now. Now, if this is established, we can move forward to the material usage variance. Now, in this diagram, you could see material usage variance. Don't forget that we start from AS to AA. Now, in the material usage, usage means consumption. That is, you are comparing your standard and your actual. So you can have SS minus AS, class. SS minus AS. So we can come to the Excel sheet and say material usage, right? SS minus AS. SS minus AS, right? And don't forget, it is what? Usage. Usage. It is material, right? You know, when you use a material, you want to produce, the material usage is material consumption variance. Now, you say you want to consume this. Now, if you want to consume 250 kg, definitely you need to buy that 250 kg. Is that also? When you say you want to consume, definitely you need to do what? You need to buy, right? You still have your QP and QP class. Match S to Q. So therefore, you can have the standard quantity SQ. Please don't write SQ in exam. You have to write it in full. Please. Because when we are solving questions, we not write it in we'll write it in full, we'll not abbreviate. Right? SQ, that is the standard quantity, right? Standard quantity times SP is the standard price, right? Minus actual quantity times the standard price. Class, you can see here that which one of these is common? The standard price, you can leave it this way, or you could say, okay, or you say which one of these is common? The standard price. You push standard price outside, right? You could say, okay, now in that case, you can have the standard quantity minus the actual quantity times the standard price, right? Which is this, right? Times the what? The standard what? The standard price. Now, if you want to compare the standard class, if you want to compare Ibrahim, if you want to compare Olalekan and Bridget, or Olalekan and Ibrahim, for instance, or IB, for instance, because Olalekan, you cannot compare Olalekan and Ibrahim. Do you know why? We must have, before you compare both of us, listen, oh, before you compare both of us, we must have something in common. Class, before you compare IB, before you compare this pen and book together, they must have something in common. Imagine you want to compare IB and Olalekan. Do we come from the same family? No. Olalekan may be short, I'm tall, right? I'm taller. Is that not so? So, and you could say different characteristics. So in order for you to compare both of us, we must have something in common. We will get there. So therefore, the standard quantity minus the actual quantity. You are comparing standard and actual. That is variance for you. Times the what? The standard price. Of course, you said you want to use, it is usage. You say you want to use 50 kg, right? How many kg did you use? That is the actual quantity. Now, is it favorable or adverse? Times what? What is the price that at which we actually set for this what? Usage. Class, am I communicating, please? Hello?
Yes, sir.
Class, am I
Yes, sir.
communicating?
Yes, sir.
Bridget, Terence.
Yes, sir.
Okay. Okay. Now, if this is established, the material cost variance, I've said it several times here that material cost variance is your addition of your material price and material usage, right? So material price is divided into two, right? Now, if you want to determine the material cost variance, you can see that in the price, we compare the AS to AA. In the usage, we compare the SS to AS. Now, if you want to compare to get your material cost variance, you will have your SS minus your AA. With this, you can do what? You can get your material cost variance, right? I won't do the material cost, the cost variance for others, right? You can do that, right? So let me just do this for this material cost variance, right? It is SS to AA, right? It is SS to AA. So we can have minus AA. So this is QP and this is QP, right? So if you want to compare this, you will say your standard quantity times the standard price minus the actual quantity times the actual price. So you can see that there is nothing that is common. The standard quantity times standard price, then the actual quantity times the actual price, right? With this, we give us to what we call the material cost variance. So class, we move on. So any question before we move on? Question? Do you have question before we move on?
Yes, sir.
Okay.
Please, what is the QP stand for, please?
Okay. The QP is the quantity and price. That is why I said, that is why we measure it at, can you see it?
Okay.
Okay, let me bring them out. Okay. QP is equals to quantity and price. Q, what is this now? Let's say Q is equals to quantity, P is equals to price. What else again? SQ is standard quantity, AQ actual quantity. What is again? Which one should I define again? SP standard price, Which one again? Which one?
AP.
A what?
AP.
AP, actual price. Which one again? Is there any other one again? Any other one? Okay, I think that's all. AQ, SP, AP, actual price, actual quantity. Okay, I think that's all. Do we get it now? Are we following?
Yes, sir.
Are we following, please? Okay. Can you see? You can see that it makes sense. It kind of makes sense, right? So whichever one that you want to use, you can see how we arrive at the formula, right? So we can move ahead. Can we move ahead, class? Can we move?
Look, sir, I have a question, sir. Can you hear me? Hello,
Okay,
sir.
go ahead.
Okay, sir. Sir, in one of the past questions, I saw about materials miss variance, materials yield
We've
variance.
not gotten there. We've not gotten to mix and yield.
Okay,
This
sir.
is just the basic variance. Do you understand? This is just what? Basic
Okay,
variance.
sir.
Okay. So we move ahead to after the material. Don't forget that the variance is divided into material, labor, variable, sales, and fixed. We have picked the material. Please mute your mic. The person should mute his or mic. We have picked. Please, the person should mute his or mic. Oh, Leslie. Now you could see that we have picked. We picked material, right? You can see the way we picked it. AS to AA, SS to AS. Because it is material, that is why we say QT. Quantity. You know, when you purchase it, when you buy quantity, definitely you have a quantity, definitely you will buy. That is the price. That is why we say Q and P. You raise it, you have Q and P. Q, P. Now, the next variance we have is labor variance. The next variance is called what? Labor what? Labor variance. Please, there is this class. System. Okay, labor variance. That is the next variance. Labor variance. Now, in the labor variance class, labor variance is, your labor. What and what will you pay them? You pay your labor per hour. Is that not so? Hour. You pay your labor, you pay your labor per hour. Is that not so? Now, labor variance is divided into two. The rate you pay them and the efficiency. So we can have the labor rate, labor rate variance, then labor and your efficiency variance. Class. Then we have labor costs. The addition of rate and efficiency will give labor cost what? variance. So you don't need it sometimes. You don't even need cost variance, because just do the difference between, maybe you have favorable in rate or adverse, the difference between the two or addition of the two, you have your labor cost. So I will skip labor cost. Now, class, why do we have this? It's because rate, you pay them per hour. Class, is that also, you pay your labor per hour. Class, efficiency means that you need to compare, are they efficient in terms of production, in terms of hourly use. Now, you can only measure labor based on efficiency. You said work for 50 hours. How many hours did you work? So you can see, from there you can see, oh, are they efficient? Is the labor efficient or not? Right? And your what? Your rate, you pay them per hour. So in this case, we can bring out, you can still bring the diagram here. So the only thing we will change, it will not be price and usage, it will be rate, because labor is divided into three: the labor cost, as well as the labor cost of this, the labor rates, right, and the costs, right. So the last one is what? AA, right? AA. Class, just follow, right? I just want you to understand something here, right? It is not, you don't need to cram the formula. You are comparing your actual with your standard, right? You are comparing your what? Your actual with what? With standard, right? So labor is divided into two or three. The cost, make it three, right? So this will be your rate instead of price, while this will be efficiency instead of usage. Efficiency, class. Now, leave the cost. Just leave the cost, because addition of rate and efficiency will give you what? Cost. Class. Because it is labor, you pay them hourly. Is that also? You pay them hourly. That is hourly rate. You pay them hourly. Why do we use, the reason why we use, now if you want to match this now, labor rate, you can see the first one is, you go for AS to AA, just like the way we did the first one. It will still be AS minus AA. Your labor efficiency will be SS minus AS. The same thing, your labor cost will be your SS minus your AA. Class. Now, we move to the Excel, right? Now, what are we going to use to raise it to power? Now, labor variance. If I want to do this, I'm starting from which variance? Labor rates. Rate variance, right? In the labor rate variance is AS. I pick it from here, AS to AA. Then SS to AS for efficiency. So therefore, AS, which is the rate, right? AS and AA. So I can have here AS minus AA. So I have to raise it to power because of labor. You pay them, they work for hour, and you pay them a rate, right? So you can say HR, human resources. It's not, HR is not human resources, so it's hourly HR, right? HR. So here is what? HR, class. Here you can have, you raise your A, A is to H. Is that also? S is to R. Is that not so? So you can have actual hour times the standard rate for labor class. The actual hour times what? The standard rate for labor, right? Have the actual hour times the actual rates, right? Actual hour times what? The actual rates. So you can leave it this at this, or you said, oh, what is common here? The actual hour is common. Is that not so, class? The actual hour is what is common. You can say, okay, standard rate minus the actual rate, right? Times the what? The actual hour. Can you see it? The standard rate, because actual hour is common. Actual what? Because actual hour is common. We can have the standard rate, the what, the actual rate. You can see that you are comparing standard and actual. Standard and actual. Now, when it comes to rate, now what did you when it comes to material? Material, what happened now? Now, when it comes to material, where is your labor? Where is your material price? If you look at it under the material, what is this now? Why is this thing is okay. Now, if you look at material price, you could see that you multiply it by the actual quantity when you compare your price. Now, when you look at the usage, the consumption, you compare it with what? You multiply it with what? When you compare standard quantity and actual quantity, you multiply it by the what? The standard price. Now, the same thing applicable here. The same thing applicable here. Can you see it? Because it is rate. You have your standard. You are comparing this. It is rate. You are comparing your standard and actual. Can you see it? Now, you can see that it is standard rate minus actual rate times what? The actual hours. The actual hours. The actual hours. The actual hours. Now, class, even without bringing the formula, I already know what will be the efficiency. Is that also? If I want to do efficiency now, I will say the standard hours minus the actual hour times the standard rates. I will just do it like that. Do you know why? Because if you look at this, please, class, just understand this thing. I just want you to understand. That's why I bring in the formula, right? The formula is not the issue. Just understand, right? You may not even use it at all. Now, see, can you see it here? Standard price minus actual. You are comparing your standard quantity, standard price minus the actual price times the actual quantity. Is that not so? Now, when it comes to this place, you still compare because it is usage. You compare your standard and your actual times what? The price, the standard price. Now, you can see that this is because it is price. You multiply it by actual. Because it is usage, you multiply it by the standard. But when it comes to this part, can you see it? That the same thing. Standard hour minus actual rate times what? The actual. Because in the what? In the material, you have what? Actual quantity. So the same thing applicable here. You have what? Actual hours. Right? Even without writing the formula, I can say, okay, the labor rate. Now look now. Labor what? Labor efficiency variance. Labor what? Labor efficiency what? Labor efficiency variance. 10 minutes. Labor efficiency what? Labor efficiency variance, right? Will be standard hour minus the actual hour class times multiply by the standard rate. Standard what? Standard rate. Now let's test the formula. Do you know why I multiply by the standard rate? Because if you look at the usage, what do you use usage to multiply? Standard price. So therefore, the efficiency is your hour. Standard hour minus your actual hour, right? Times what? Times the standard rate. Or you go by the formula, right? Let's quickly check out the formula, right? Let's quickly check out the formula. It is what? What is our SS to AS? Is that not so? SS to AS, right? HR, and this is HR, right? HR to HR, right? So this will be standard hour. I will still define the terms, right? Times the standard rate minus the actual hour times the standard rate. You can leave it this. You can say, or which one is common from this part? What is common here is standard rate. Is that not so? Standard rate is what is common. So you can have the standard hour minus the actual hour times what? The standard what? The standard rates. Can you see that it is still the same thing? Class, are we following? Hello, class. Are we sleeping or we are
We
following?
are following, sir.
Okay. Now, can you see it? Can you see that it is still the same thing? So you see, simply you don't need to cram anything, class. If it is rate, if it is price, compare your standard. If it is material price, I will say the standard price minus the actual price times the standard times the actual quantity or the actual rate, right? Times what? The actual standard price minus the actual price times the actual quantity. Now, if it is usage, I will say, okay, standard quantity, because it is usage, consumption, minus the actual quantity times standard price. Now, in the labor, the same thing you did for, but if labor will be hour. You say, okay, labor, the standard rate minus actual rate times what? Actual hour. You can see that the one of rate is actual quantity times actual quantity, right? So the one of what? Rate will be what? The actual what? Hours, not quantity. Now, the same thing applicable here, right? The standard hour minus actual times what? Rate. Of course, you pay them. So you can now have your either favorable or adverse. Class, are we still together? Who is against me in this class? If you are against me, let me know. Are we still together? Before we move on, do you have question? If you have question, meet your mind quickly. So should I define the terms? Hello, class. Hello. Per hours. The same thing you did for quantity that you multiply with the actual quantity. Then when you're looking for the efficiency, which is hour, because you need to measure labor efficiency based on what? Based on their hours, right? Based on the what? The hours work, right? Based on the what? The hours what? Hours worked. Now, quickly, should I define it? SH is what? Standard hour. Then what else? This is actual hour. Another thing again, SR, standard rate. Do you have anyone again? Class, are we good? Class, are we good with this? Answer. Oh,
Yes, sir. We're good.
okay,
Yes, sir.
okay. Okay, this is just a basic variance, right? This is what? Basic variance. You can see how we started. That is why you need to compare your standard and your actual. And that is what we want to do in variance. That will give you either favorable or adverse. So if this is well understood, we move to another variance, which is variable overhead variance. The variable overhead variance, I usually call it labor variance. Class, listen to your variable overhead variance is similar to labor variance. They are the same thing, but the figures that you'll be given in the question will not be equal, right? You'll be given what is equal, different figure for the variable overhead, but it is still the same approach because your variable overhead will varies according to the levels of activities, according to what you produced. So therefore, variable overhead variance, this is what we call basic variance. These are the basic variance, right? Variable overhead variance, variable overhead variance. So we have variable, you have a variable expenditure, variable expenditure variance, and variable, let's say variable expenditure. Let me put it in capital letter. Variable overhead variance is divided into three. So variable uh, expenditure variance, variable efficiency variance. Class, if I were you, right, what I will just do is that, oh, this is expenditure. I will just open bracket. This will be rate. The way you did, the way you calculate the labor, right? This quickly equate this expenditure to rate, right? Then this will be efficiency, which is labor, which is hour, right? Now, your expenditure variance is like your labor rate variance. Class, your expenditure variance is like what? Labor what? Labor rate variance. Variable cost variance. Now, let's the same thing. We don't need to draw any diagram for the for variable overhead because you still make use of your labor variance. The only difference is that instead of saying this is for instead of saying this is for what is it called? This is for labor, it will be variable overhead, right? It is still the same thing. So in this case, since they are still the same, what is it called? So the only thing is that I can just change it as expenditure, right? But then I can say variable overhead, variable overhead variance. Class, variable overhead variance. So the first one is variable expenditure, right? Variable expenditure is still the same thing as the one of labor rates. So I don't need to draw any diagram, right? But the only difference is that if I want to write it, I will say, oh, this is for variable, it is not for labor. It is not for labor, which we will do that, right? Expenditure variance. Now, the formula is still remain the same, right? So I don't need to put this here. I can just, let me just pick this, right? The standard hour, the standard variable overhead, the standard hour for variable overhead, I can just copy this because it is still the same. Class, am I communicating? It is still the same thing, but this will be for what? Variable. This will be for what? Variable. Why this thing did not copy? Okay. Now, this is what you will change, class. This is what you will change. Now, the SH is equals to standard variable. This is standard labor. Can you see? This is standard labor. Let me differentiate it. So why this will be what? Standard variable overhead. Standard variable overhead hour. Class, that is the standard variable overhead, right? The actual, say actual variable overhead, actual variable overhead, right? Actual variable overhead, where is it? Overhead hour. Which one am I using self? Okay. I'm coming. This is efficiency. Okay, it's supposed to be rate. And you guys did not correct me. I'm using sure I said the expenditure is like rate, right? I'm not using it. So it's supposed to be standard rates. Expenditure is like rates, right? Yeah, I did not correct me. I'm using efficiency for rates. Okay? So this is standard rates. This is standard rates, actual rates. So standard variable overhead rates. That is why I said use expenditure, variable expenditure variance as rates, right? Because it is a cost variance, right? Variable expenditure variance, that is standard variable overhead rates, right? AR is the actual variable overhead rates. Then the last one is the actual hour. Actual hour. This is actual variable. This is actual hour. Sometimes you may have actual variable overhead hour. Fine. But most times you will have the actual what? Actual hour. So if you have the actual variable overhead hour, use it. If you don't have, you move on. Right? This is this. So variable overhead expenditure variance make use of the labor rates. That is why I just copy and paste the formula. Right? So the efficiency is still the efficiency of what? The efficiency of labor, right? So next is what? The efficiency, variable efficiency variance, right? Variable efficiency variance. variable efficiency variance, right? So I can decide to copy this part to be variable efficiency variance. Where is it? Okay, standard hour. So still the same thing. The only thing you just change, this will be for variable, right? Where SH is standard variable overhead hour, while the actual will be the actual hours work class. It is actual hours work. Let me quickly change this to actual hours worked. Now, actual hours worked, right? So this is not correct. Okay. Now, class, are we still together, please? So SR is the standard rate, standard variable overhead rate, standard variable overhead rate. So, in a nutshell, the variable expenditure make use of the labor rate, picture it from that side, right? While the efficiency is still the same thing, right? So the only difference is that this will be for variable, the other one for labor will be for what? Labor. Please, ladies and gentlemen, do you have questions for me before we move to the sales variance? If you have questions, quickly unmute your mic before we move to what? Sales variance. Don't forget that if it is expenditure, you can see that you multiply by the actual what? Actual hours, right? Actual what? Actual hours. Then, if it is efficiency, you want to know if they actually efficient. So you need to compare what they work, right? This actual hours is actual hours paid. Actual hours paid. There are two different things, no? So this should be actual hours paid. Let me quickly go and check where actual hours paid. Where is the definition? Okay. Okay. Efficiency. So if it is efficiency, right? If it is efficiency, actual hours paid. Okay, thank you. So the efficiency will be what? Actual hours worked, because you want to compare the actual and standard. So if you have question for me, please quickly unmute your mic and ask your question. If you have question, quickly unmute your mic, please, before we move to sales variance. Hello, class. Hello. Am I the only one in this class?
No, sir.
No,
We are
sir.
here.
I hear you.
No, sir.
Fine, sir.
Okay. That's fine. That's fine. That's fine. So the another type of variance that we have, don't forget I say addition of your expenditure and efficiency. See, if the question says you should calculate cost variance, do you know what you will do? Do you know what you do? Calculate the variable expenditure variance. Calculate the efficiency variance. Subtract and add. You have your variable cost. Variable cost variance. Or you use the normal formula that we normally use, labor cost. You can just pick it up from labor cost, HR. The standard hour, HR, and HR. You can use it like that, right? Or you calculate your what? Variable. Okay. Right? So addition of the expenditure and the efficiency, either favorable or adverse, we give us what we call variable cost variance. Class. So another type of variance that we have is sales variance. Sales variance. You know, you make a sales. Class. You will do what? You will make a sales. Now, under the sales variance, there are two types of variance under the sales variance, right? There is sales volume variance, right? There is sales volume variance and sales price variance. Class, sales price variance, right? And sales volume variance. Class, volume means output. Now, in your sales class, in your sales variance, you know this is price. You compare your actual and your standard. Class, you compare your actual sales or selling price, actual selling price minus the standard. So we can have, so I don't need to draw anything. I can have actual actual spelling of actual. Someone should spell actual. Is this correct? Okay. Actual. So, we can say standard, or you start from actual, anyone. You can start from actual, you can start from standard, anyone. Standard selling price minus actual selling price, right? Now, you compare the standard. Can you see? Something should come to your mind. Times what? Who can give me times what? Times what? Remember labor
The
rate.
actual quantity.
Thank you. Thank you.
Actual quantity sold.
Thank you. Actual quantity sold. Thank you. Remember labor rate. Remember material price. Material what? Yes, remember material what? Material price. Don't forget. Under the material price, you do what? You said the standard, right? The standard price minus actual price times the what? Actual quantity. Actual quantity. Is that not so? Now, still the same thing under labor. You say standard and actual. Is that also times what? The actual quantity, actual hours under labor. Actual hours is actual. If it is price, actual. So you have what? Actual quantity sold. So the volume is like your profit, right? The volume is what? It's like your profit. Now, you said it is what? The standard quantity, right? Or you say standard sales in volume. Don't forget standard sales, right? Is volume. That is standard sales units. Let me use sales units minus actual sales units, right? Because it is volume, just like efficiency class, just like what? Just like the way we did what? Efficiency. You multiply efficiency is times what? The standard rate, right? Now, the same thing applicable here. This is volume. You multiply by what? The standard contribution. Now, there are two approaches to this. Some say you multiply by a standard contribution, and some will say multiply by standard profit. Class, listen attentively. Listen. Class, if the question says that the company operates on marginal costing, if it is on marginal costing, you multiply it by the standard contribution. You multiply by the what? By the standard what? By the standard what? Contribution. Marginal costing approach. If the question says the company operates on marginal costing approach, you multiply it by the what? The standard contribution. But if the question says that This company operate on absorption costing, right? You have to multiply by your standard profits. By the what? Standard what? Standard profits. You multiply by what? Standard profits. So this is absorption costing, right? So question will tell you if they are based on, if it is based on marginal or absorption. Maybe the question will actually state it it will clearly be stated in the question class. So standard profit. So question before we move.
Sir, I have a question, sir.
Please go
Hello,
ahead.
sir.
Go ahead.
Okay, so in a show whereby the question say prepare all relevant variances and reconcile the profit. They didn't specify. So what can we use in that instance?
So you check. Okay, all relevant. Will it be stated like that? You check the standard. Check the standard and use the standard profit. Move on with standard profit.
Okay, sir. Thank you,
Just
sir.
check the standard. Check the standard. Just your sales from the standard, you will see sale from your standard cost card. You will see sales, you will see variable cost, you will see this. So when you subtract and add, you have your standard profit, right? You can use that. If it is not stated, use standard profit and move on, right? Thank
Sir,
you.
what of fixed overhead?
We have not done that
Sir,
now.
what of fixed overhead?
We are coming there. We never finished. That is the next one. Can you see it? Can you see it?
Yes, sir. Yes, sir.
Okay. Now, we move to one of the problematic of variance is this part of fixed. If you know it, you know it. If you don't know it, you don't know it. That is just about fixed overhead variance, right? That is what? Fixed overhead variance. So, under the fixed overhead variance, what is fixed overhead variance? The fixed overhead variance, total variance is the differences between the fixed overhead incurred and the fixed overhead absorbed. In other words, it is either under or over assumption. Class, sometimes you may have what we call walk back variance. Now, if you want to, okay, don't allow me go back. I don't want to go there now. Now, the fixed overhead variance, if you want to determine the rate, you have to use your fixed overhead absorption, which is budgeted overhead over budgeted overhead, so that you have that is what we call FOA, that is fixed overhead absorption rate, right? We know that. Now, under the fixed overhead rate or under the fixed overhead variances, there are two actually, right? There are two, but one of them is divided into two. Actually, there are two, which is the fixed overhead expenditure variance and the fixed overhead volume. The fixed overhead volume is divided into the fixed overhead efficiency and the fixed overhead capacity. Now, the fixed overhead expenditure variance is the difference between the budgeted fixed overhead and their what? And their actual. Class, you and I know that you cannot just compare these two together and tell me that, you see your budgeted fixed overhead, what is it? 19 naira. And you now go, what is your actual fixed overhead? It's 15 naira. You now compare there, you now say, oh, it is your. No, that would be very wrong because you cannot compare these two together, right? Budgeted must have element of actual. We'll get there. But budgeted overhead must have, before you can compare me and your, let's say, Olalekan, before you can compare, we must have something in common. You can either bring something that Olalekan have that I don't have, so that you can now say, oh, they are comparable. You can compare them. We'll get there. So the budgeted fixed overhead expenditure and the actual will give us what we call fixed overhead expenditure variance. Now, under the fixed volume variance, right? Don't forget it is what? Volume. You multiply by the standard overhead absorption rate, which is OAR. You will see it in the question. We'll get there. So this is volume class. This is what? This is volume, right? This is what? This is volume. So in this case now, if you want to determine the volume, it will be actual, right? Minus what? Minus the budgeted. Don't forget, you multiply by the what? By the standard rate, because it is what? It is rate. Then that standard rate here, what here? This standard rate here, class, it is fixed overhead. That is why I said multiply by the standard of absorption rate per unit. The difference between the actual and the budgeted volume, right? Class, am I communicating? Am I communicating, class?
Yes,
Yes,
sir.
sir. Yes, sir.
Yes, you can call this, let me use this as FOAR. FOAR, who can tell me the meaning? FOAR is what? Fixed overhead. Fixed
overhead
Fixed overhead assumption rate.
Thank you. I don't need to write that on there. Fixed overhead absorption what? Rate. Thank you. So the fixed overhead efficiency variance is the difference between the numbers of hours. Can you look at it? The first one is your volume. Class, your volume. The second one, when you want to measure efficiency anywhere, it is hours. Anywhere, it is hours. If you want to measure efficiency, class. If you want to measure volume, units. This is efficiency. Efficiency goes with what? Hours. Standard hours minus actual hour times what? The standard rate. This standard rate is the fixed overhead absorption rate. Class, this standard rate is fixed overhead absorption rate, which is FOAR, because we are in fixed overhead variance. Next is your capacity. What is your capacity? Now, what is the difference? Is the difference between the numbers of hours that actual production should have taken and the numbers of hours actually what? Taken. The numbers of hours that you're supposed to take normal, that is the standard. And what you have actually, that is hours what? Hours worked. Then, don't forget, fixed overhead variance is divided into two, the expenditure and volume. Under the volume is divided into efficiency and capacity. All right. Any day, anytime you want to measure efficiency is what? Hours. When you want to measure volume is units. Then what is efficiency? What is capacity? Class. What is capacity? The fixed overhead capacity variance is the difference between the budgeted hours worked and the actual hours worked multiplied by the what? The standard what? The standard rate. The standard absorption rate. What is capacity? It's the difference between the actual, the budgeted hours and the what? The what? And the what? And the what? And the actual, right? We give us what? The capacity variance times what? The standard absorption rate, that is fixed overhead absorption rate, that is OAR. Class, your efficiency and capacity, when you add your efficiency and capacity variance together, will give you volume. See, if you are confused, if the question says calculate efficiency and capacity, you know what you do? See, if you don't know, just say, oh, efficiency, and you know that, this answer, you are not sure of it. what you will just do for you to confirm your efficiency and capacity, when you calculate it, calculate volume. The addition of efficiency and capacity will give you volume, fixed overhead volume. Class. The addition of efficiency and capacity will give you a what? Volume. Right? So fixed overhead expenditure, then volume. So I want you to ask question before we move on. Question. Question, please. No question. Can we look at past question?
Yes, sir.
Okay. Okay. So let's go back. It's a minute, please. Say 18 days. Then you can go back to the usual, right? So, where are we? Where are we? So, let's check the
What
question
are
out together.
for those of you that is single?
For those who what? For those who what?
Those of you that we are celibate.
For
Who
those
are
who don't
celibate?
have. For
For
those
Who
who
those
are,
are
who
who are
single.
celibate?
for those who don't
You
have,
can be
like
From
me,
the
single.
like
single
this.
to stupors.
Interesting. For those
You
who
can
don't
be
have,
single
like
and
me, like this. You say,
you can be single and celibate,
Olaide.
and you can be single and not be celibate.
Olaide. So, for those who are single like that, so like me, so we'll be like that for every month on month, or day to day.
So what about people that are still that are married?
Oh, the people that are married, uh, your wife can actually understand that. Okay, in this period, she can excuse you for like 13 days. I think 13 days to 18 days now, right? Can excuse you for like 18 days. Then after that 18 days, we are good.
Continue the love back.
Abi, this parent, So, so let's really look at this question. Goodland Limited produces and sells a single product. Please, Oluwani Sola Sarah, please mute your mic.
Okay.
Goodland Limited. Okay, required first. Okay, please, can someone read for us? Sorry. Can someone read for us? Okay, oh, you are afraid, Abby? Don't worry. Okay, don't worry. Thank you. This is 15 marks. Prepare a statement that reconciles the budgeted gross profit. Oh, you are reconciling the budgeted gross profit with the actual gross profit. Interesting. For the month, with a detailed computation of all the variances involved. So we have to prepare a reconciliation based on the above question, right? And they equally state it as budgeted gross profit. Can you see it? It was stated. Then we'll still see in the question if it is anything like absorption costing is even still stated. Let's see. Good land, good land produces, good land produces, good land produces and sells a single product. The company adopts a standard absorption costing system. Can you see it? So which means that when you want to determine your sales volume, you multiply by the standard gross profit, right? Standard gross profit. Because this is an assumption cost. But even in the required, it has already been stated that, okay, budgeted gross profit and the actual. But then that one does not do with, it does not have anything to do with this. But my take here is that when the company operates on marginal costing, or still in your reconciliation, if the question, if it is on marginal costing, you start with projected contribution. If it is absorption costing, you start with what? The budgeted profit, right? Because it is based on absorption costing, right? You can see the way I'm talking, right? I didn't have that strength, but if not because the class this class is very important. If not, I'm not supposed to have this class, right? But let's just manage the way, like, let's just manage it, right? The way it is, please. So presented below are the standard cost details and the selling price for a single unit of the product. The selling price is 6,000. You're given the selling price. Can you see it? Now, all this information, standard cost details. Now, this is what we call standard cost card. The information here on the standard. All the information here are standard, are called what? Standard what? Standard cost card. Now, what is the standard cost? Now, the standard cost is 30 liters, for instance. You can see it times 90 is 2,700. That 2,700 is the standard cost, is the standard material cost per unit. That is the standard cost. It is predetermined unit cost class. It is what? Predetermined unit cost. The same thing applicable to these 10 hours, right? When you multiply by 120, you have your standard cost of material per unit, right? So these are all your standard. It has been estimated that the production and sales for the month would be 2,000 units. Production and sales for the month will be, as it has been estimated. So this is also your standard unit or budgeted unit. Can you see? It has been estimated. It is what you estimate. That is standard. However, the estimated production for the month has been used as a basis for determining the fixed overhead absorption rate, which means that when you want to determine your OAR, when you want to determine your fixed overhead absorption rate, it is based on, don't forget, you can absorb your overhead, either labor hours or machine hours or unit produced or prime costs. Don't forget this, right? Under absorption costing. Now, in this case now, it has been stated that how you will absorb your overhead, it has actually been stated in this question that, however, the estimated production for the month has been used as the basis of what? Absorbing your overhead, which means that when you want to determine your OAR, it will be what? The budgeted overhead over budgeted levels of activities will now be the estimated unit cost, estimated unit of what? 2,000. Now, the actual results. You have the actual production, the sales, the selling price, and all is given to us, right? So in this case, we should calculate all the relevant variants. Class, we'll calculate material, we'll calculate labor, we'll calculate variable, the fixed overhead, as well as sales, because they are given to us in this question. It is given to us in what? In this question. So we'll start with what? The material price variance. So what is that? Material price variance. Suggest a solution. So material price variance, materials you mix and yield. Okay. So let me just put this one down. So suggest a solution. Which diet is this? Survey. Which question? Which diet is this? November what?
214, sir.
Hello. November 2014. Right. 3 minutes. Okay. Okay. So let me quickly create another link so we can continue from there. Right. Yeah, we're ending. So just a solution, material price, material variance. So we are starting with the material price variance. So since it is price, it is standard. You don't write STO in exam. Write it in full, then you can abbreviate later. Standard price minus actual, right? Actual price times the actual quantity, right? Is that clear? Right. You can see that that is what we have. That is what we have in our formula, right? So that is what we have in our formula. The standard price minus actual price times actual what? Times actual quantity. So now we go to material. What is our standard? Let's check the question. What is the standard price? Class, you can give me what is the standard price?
90.
Material.
19 naira.
19 naira. Who said 27?
Sorry, sir.
Oh, I beg you. That 2,700 is cost. That is why I analyze it at the beginning. That 2,600,
Noted.
16, Clementine Abi, right? Is what? Is costs. When you multiply 30 times 90, we give you material cost. We give you direct material cost. Then all these things in the standard are standard cost card, right? So material price is 90 naira. So we need to check what is the actual price.
120.
120. And sometimes, see, you have to be very, very careful. Sometimes the actual price of the material may not be given to you. But guess what? Please mute your mic. Who is that now? The person should mute his or her mic, please. Now, you have to be very careful here. The actual price of the material, of direct material, may not be given to you in the question. But the total material consumed will be given to you as 88,000 liters. And the actual cost of the material will be given to you. But the price per one will not be given to you. But what will you do? Is for you to divide, just say the total cost of the material divided by the material consumed, the liter, will give you the price per one. right? And sometimes this price may not be given to you, but when you want to calculate it, definitely 88, like let's say for instance, 88,000 liters will be given. The cost of the 88,000 will be given to you. Let's say the cost is 10,000. You just say 10,000 divided by 88 liters. We give you the price, the actual price per liter. Class, please pay attention to that part as well. It's very It's very important. So 120. Now, is this favorable or adverse?
And
Is this
adverse.
favorable?
Adverse.
Okay, adverse, right? Because we set a standard of 90, you now spend 120. That is adverse. So what is the actual quantity from the question? What is the actual quantity?
88,000.
What is the... Thank you.
88,000.
Now, let me still tell you something. If I can want to lock this question, this 88,000 liters will not be given to you in the question. But the question is, how will you determine your 88 liters? Class. So definitely the unit per liter will be given to you. Class. If they will use 7 kg to produce 7 liter to produce 1 unit, how many units did they produce? You say 7 times the unit. We give you the total numbers of liters that they will use to produce that unit. Let me come again. Sometimes these 88,000 liters will not be given to you, but how will you determine the 88,000 liters? Now, definitely they will give you 7 liters per unit, right? The rate, the units, the 7 liters per what? Per unit. The question is, how many units did they produce? Like 7 times the unit produced. We give you the total numbers of liters consumed, which is 88,000 liters. So I'm just telling you in case you're not given. So times 88,000 liters. So we already say this is adverse. Adverse of what? What is the adverse? When you multiply and everything, what is the adverse?
40,000. 2,640,000.
2,640,000. Adverse 2,640,000 adverse. Right? Adverse. So under the material variance, we have material usage. Please, you don't need to calculate. Either you want to calculate material price and usage, and you will leave material cost, or you just calculate material cost and leave material price and usage, because addition of material price and usage will give you what? Addition of these two will give you what? Addition of the two will give you the material cost
Material.
variance. So there's no point, right? There's no point of doing material cost variance where you have material price. You already calculate material price and material usage. So unless if you say, okay, I don't want to calculate material price and usage, calculate material what? Material cost directly, right? Okay. So material usage, variance, right? So this is usage, right? Right. This is what? Usage. That is what? Consumption, quantity. So I can go back to my formula and check, or I can come here, please. Don't abbreviate to actual quantity times minus standard, or you say standard. We already start with standard. Let's use standard. Standard. I just bring out that formula in case you just forget all these things, right? Standard quantity minus actual quantity, right? Since it is usage times standard price, standard price. Class, you can come here and still confirm. You can draw the table and confirm. Okay, yes, the standard price, right? Is what standard price, right? Now, what is the standard quantity? What is the standard quantity, class, of material?
30 liters.
30 liters. Good. What is the actual quantity? Actual quantity. What is the actual quantity?
The 2,000 that were produced.
Actual quantity.
88.
Quantity, not units. I say actual quantity is
80,000.
what?
88,000.
88,000 liters. Now, I want to ask you a question. You said the standard is 30 liters per 1 liters per unit, right? Now, times minus 88. I'm coming there. 88,000 liters. Standard price.
Sir. Hello, sir.
Yeah, I'm with you.
The actual, are we not going to divide that 88 by 120? Since we are picking per unit up on the standard.
Interesting. It's coming. I like that. But don't worry. What is the standard price? What is the standard price?
90.
What is the standard price? What is the
90.
transfer price? Class, what? 90.
90.
90. No. Because you have the actual. No. Because you have the actual quantity. What they need here, you are actually right, but the actual quantity is 8,000 liters. And the standard, what is the standard, class? What is the standard quantity? The standard quantity per liter is 30 liters per unit. Now, we cannot use 30 liters per unit to compare 88,000 liters. And that is why you say you want to divide. Right?
Yes, sir.
Fine. Now, this is 30 liters per unit. Now, if I want to multiply this 30 liters per unit, I will multiply it with what, class? If I want to multiply this 30 liters per unit, I will multiply it with what?
Actual output.
Thank you. Thank you. That is brilliant. Because you cannot multiply with that. And I've talked about this, that you cannot compare IB with Olalekan. Do you know why? You can only compare both of us if we have something in common. So you cannot compare standard and actual. Standard must have element of actual. You cannot compare standard with actual. No. If you want to compare me, IB and Olalekan, or IB and Leslie, I must have something in common with Leslie before you can compare me with Leslie. You cannot compare someone who has 2 wives and someone who have 1 wife together. You can't compare them. The person that have 1 wife, before you can compare it with the person that have 2 wives, the person that have 1 wife must have something in common to the person that have 2 wives. Then you cannot say, yes, it is comparable. It is comparable. Class. So if you look at it, I think someone mentioned that 8 times 2,000 units. If you multiply by 2,000 units, no, because if you multiply by 2,000 units, it means that the projected did not have element of actual. It is not correct. Why? Because you cannot compare IB. You cannot compare me with with Adeyemi because I must have, if Adeyemi is married now, for instance, I'm not married, right? So you cannot compare both of us. I must have what Adeyemi has, right? Before you can say you want to compare. So your standard, which is your projected, must have the element of actual before you can do what? Before you can compare them. Class, am I communicating? Class, am I communicating?
Yes, sir.
Good. So what is the actual unit? Don't forget it is 30 liter per unit. What is the actual unit?
2,800.
2,800. Right? That is the what? The actual unit. 2,800. So 30 liter times 2,800 units. How many liters?
84.
84,000 liters. Minus it's 8,000 times. So is it favorable or adverse?
Adverse.
Is it favorable? Adverse. So what is the adverse?
4,000.
4,000. Class, are we still together?
Yes, sir.
Okay. Equals to 4,000 naira adverse. Right? Please mute your mic. Okay, you can see the person that mutes his her mic. The person is married, right? Can you compare the person with who again? Leslie.
Leslie, yes, sir.
You can't. Leslie must have Leslie must have something that the person has before you can say, okay, yes, go ahead and compare them. So this is adverse. Interesting, right? That is variance. I like variance because you don't need to cram. See, just understand. If you understand, you can use that formula. You can use that AS, this. You can use it. Yeah. So what do you have? Okay. Clementina, unmute your mic.
The final answer is not supposed to be 360.
Oh yeah, now what do you have?
360 minus
Uh,
360.
okay, 360 million or 360,000.
360,000.
360,000. Okay, that's fine. Makes sense. Makes sense. Okay, next. Any other question?
Sir,
Ma,
that answer is minus 360. Can we just leave it?
that's why we say is adverse.
Okay, okay.
Do you understand? So you can start it first. You can say actual quantity minus standard quantity. So whichever one you want to do. You get? Do you get?
Yes, sir.
Okay. So I'm done with this. I don't need to do material cost because material price and usage will be equals to material cost variance. So what is the next variance we need to calculate? Labor, right? According
Yes,
based on the
sir.
question, labor. Please mute your mic. I think it's echoing. Just mute your mic. Leslie.
Sir.
Leslie now. Mute your mic.
Okay, sorry, sir. Sorry, sir. Sorry, sir.
Okay. Thank you. Material variance. According to the question, we have labor variance, right? labor variance, right? Labor. Uh, that's why I just like the PDF, right? And that PDF I like. If not, this thing will just be delaying us, right? But it's fine. It's fine. So, labor variance. Please, next time you want to send this thing, please always send the PDF, right?
The
So I
PDF
can
was
just
there
copy
now.
it.
You chose this one.
He said I choose this one. She just attacked me straight.
As the hot,
Wow.
as the hot.
I'm Igbo now. I blood
My
the horse.
material rate variance. Material rate variance. I mean, is it rate, right? Right. Share is rate, right? Material rate, right? Is it
Yes, sir.
rate?
Yes, sir.
Labor rate.
Okay. Oh, thank you. And someone said, yes, sir. Okay. Oh. I was looking at it that I was looking at the material rate. Which one is material rate? I was like, which one is material rate?
I did not hear
Let
the
me check this
material
thing
way.
again. Just the play. Yeah, just the play. So you can start with actual or you start with standard, right? Let me just start with actual. You can start with standard, you can start with actual, right? So, um, so the actual rate minus the standard rate, right? Times what? The actual quantity, right? So we check what is the actual rate.
150.
I need to confirm. Actual rates.
So is it not supposed to be actual hour?
Rate. Away. Efficiency. If you want to do your efficiency is hour, right? Is that not what we did at the beginning of this class? Right? I'm coming. No. How can rate become standard rate? Rate to class. If you want to do efficiency is, they say it is labor rate. Hello,
Oh, sir,
do you get?
yes, I know it's supposed to be standard rates minus actual hour all over actual hour. That's what
Uh,
I
uh,
know.
You
who
sure?
is
You
giving you that
sure?
formula? Hello. See, that is why. See, you have to relearn, right? You have to do what? You have to relearn. You have to unlearn what you've learned before, right? And you relearn. See, remove all those formulas, right? You remove all those formulas and focus on these things I'm giving you now. Don't see, you have to relearn, please, right? Now,
Okay, sir.
this is rate, not hour. I'm at the beginning of this class. I'm sure you are there at the beginning of this class when we were doing our analysis, right? If you are there at the beginning of this class, you should not say, okay, this thing is hours or class. So what I have is that you are to compare your actual rate and the standard rate times the actual quantity, right? Right? Okay, is rate, right? Times what? Actual weight times what? Yes, is actual quantity now, right? Actual what? Actual quantity. Is it actual hour? Okay, actual
Actual
hour.
quantity.
Actual hour, right? Because it is labor, right? Actual what? Actual hour. Class. The standard rate minus the actual rate times actual what? Actual hour. So we go there and check our actual rates. So let's check our actual rates. Now, in direct labor, we have 21,000 actual rates. Actual rates. Now, what is the actual rate here in direct labor? What is the actual rate, class?
150.
150 naira per.
Hour.
Don't forget, I've equally mentioned that this 150 naira per hour may not be given to you in the question. And for you to determine your rate, definitely the cost of 21,000 hours will be given to you. Just say the total cost divided by 21,000 hours will give you the rate. So 150 naira per. Please always call it. Say 150 naira what? Per hour. Please.
Hour.
It's very important. Thank you. 150 naira per hour. What is the standard rate?
120.
120 naira per hour, right? 120 naira per hour. What is the actual hour?
21,000.
The actual hour
1,000.
21.
21,000.
hours. Now, in case the actual hour is not given to you, how will you determine your actual labor hours? Class, you'll be given
We'll be given the cost
7
for that.
hours per 7. Please, the person should mute his or mic. Please, mute your mic now. You may be given maybe 7 hours per unit. So 7 hours per unit times what is the total hours? What 7 hours per unit? What is the total unit produced? Right? It means that 7 hours per unit means that if they produce 1 unit, they will use 7 hours. 7 hours to 1 unit. So when you multiply it, it will give you the what? The hours. So in case is not given to you in the question. So is this favorable or adverse?
Favorable.
Adverse.
Favorable.
You said
Favorable, sir.
Favorable.
Adverse of 630.
Favorable.
you want to stay the stand rate now. Whether favorable or adverse. Let's check. You said the standard that you want to spend 120. You end up spending 150. Will
Adverse.
that be favorable to you or adverse?
Adverse.
Adverse.
For you, so interesting. I beg, give me final figure, please.
630.
630 adverse. 630 adverse. You set a standard, Leslie. You set a standard that you want to marry 2 wives. Then you end up marrying 4 wives. Is that favorable to you or adverse?
It's
It's
favorable.
an adverse.
Ah,
Sir, it depends. It depends on the situation you see yourself. It might be favorable, it might be adverse. It depends.
just they
It
play. You
depends.
just kill yourself.
Sir, it depends.
Sir, marrying 4 wives does not
But
kill
you don't see
people.
money here.
Okay, we
You go
will
and
talk
take the
about
first
that
wife now.
after this class. So we'll talk about that after the class. After the labor rate, we have labor efficiency. Labor efficiency variance. I can start with standard, I can start with actual. Anyone, just understand what you are doing. That is the most important thing, right? So I can say this as standard, right? Standard efficiency, standard hours minus actual. Don't forget, any time, any day, efficiency measures hours. Standard hour minus actual hour times what, class? Times what?
Actual output.
Times what? Okay. Times what?
At standard rates.
Times standard rates. Class, check what you did in material and usage. The first one, you multiply by actual because it is price. The first one, you multiply by actual hour because it is rate. The second one, because it is quantity, you multiply by standard price, right? Yeah, because it is hour, you multiply by standard rate. Or you go and formulate that my formula, right? You can formulate that, right? But what I want you to understand is you are comparing standard with actual. You are doing what? You are comparing standard with actual. So standard hour, class, what is our standard
10
hour?
hours.
Let's check. 10 hours, 10 hour per unit. Multiply by, because you cannot compare Leslie that has 4 wives with Olalekan that has 2 wives. They must have something in common. Is that not so? So minus, what is the actual hour? What is the actual hour?
21,000.
Let's check together.
1,000.
21,000 hours.
21,000 hours. So you cannot compare the standard and the actual. The standard must have element of actual. So therefore, the 10 hours per unit, you multiply with the actual units so that you can compare Leslie that has 4 wives and the person that have 2 wives. Is that not so? So you multiply by the actual. What is the actual units?
2,800.
2,800 units minus, what is the actual hour? 21,000 hours, right? Right?
Yes,
Yes,
sir.
sir.
What is the, okay, times the standard rates. What is the standard rates, class? What is
90 naira.
for labor?
120.
120, sir.
120.
120. So 10 times 2,800, what do you have?
480,000. Okay. Sorry, I was giving you the 28,000.
28,000.
28,000 hours minus
20.
21,000 hours times 120 naira per hour.
840.
840,000.
But favorable.
Is it favorable or adverse?
Favorable.
Favorable.
Yes.
You said you want to eat, you said a standard that you want to eat 2 times in a week because because of unforeseen, you decide to eat what? 10 times in a week. Okay, Abby, even lower, maybe once in a week, because of the economic situation. Leslie, is that not so?
Sir, sir,
So
sir,
it is favorable to
sir.
you,
Anybody
right?
chop 2 times a week na billionaire. Na billionaire.
So 840 favorable, right? 840 favorable. So I don't need to do the material labor cost variance
So you put
because
minus. So
no, I say equals to. Is it not equals to? Okay, wait. Who be that? Let me reserve my comments. Who is that? Is it
Na
Pere?
she, na she.
Don't worry, let me reserve my comments to the end of this class. So the next, according to the based on the question, what is the next variance?
variable
The variable
overhead.
overhead variance, right? Variable overhead variance. You can see, do you need to cram anything? You don't even need textbook, right? The variable overhead variance is divided into expenditure and efficiency. And I've mentioned at the beginning of the class that your expenditure is your rate, is like your labor rate, is like your rate. So therefore we can have variable expenditure variance. You can open bracket and say just put it so that you will know. You just trace it to rate, right? You trace it to what? Rate. So I can copy this formula under rates and say actual. I can copy this under rates, then I will change it to instead of labor, actual variable overhead rates minus standard overhead rates times what? The actual hour. Now, so what is the actual variable overhead rate given to us in this question?
31.4.
Let me quickly check. I have to check and confirm.
No, it's not given. I calculated it too.
Actual variable overhead. Okay. Actual variable overhead is not given. Now, what is the standard variable overhead? What is the standard variable
30.
overhead rate? What is the standard variable
60.
overhead rate? 60. Right? The girls, the ladies are not saying
16
anything, right?
naira.
Okay. Now that kind of voice I like to hear. 16 naira. Can you say it again? Who says 16
60
naira?
naira. 60 naira.
No, I beg, come
60
on.
naira.
We want it. I beg, come on.
16 naira.
No. So the standard overhead rate is 60 naira per hour, right? Now, you can see what I'm saying, that the actual variable overhead is not given to you in this question, right? But the cost of the overhead is given. But what? The cost of the what? The cost of the overhead is given. Now, you just need to do that. What you need to do is that, and what is the actual hour? Is the actual hour given in this
Yes, sir.
question?
21.
Thank you. 21. Now, don't forget, you said it is 60 naira per hour. So your actual variable overhead rate should be maybe 10 naira, maybe I'm just assuming maybe 5 naira per hour, so that you can compare, right? Because they have the same thing. So since the total cost is given, what is the total cost?
660.
600
660.
660. Okay. 60. Now divided by the labor hour. The actual labor hour is given, so that you will have the actual labor rate per one, right? Before you can do what? Because you can say, oh, you want to do what? You want to compare, because this is, because before you can say you want to do what? Compare, right? So what is the actual hour? 21,000 hours, right? So when you divide it, what do you have?
31.4.
Class, when you divide 31.4 naira per hour, right? Times the actual hour, which is 21,000 hours. Can you see that this is what I've been explaining since, that you should, in case it is not given, the variable overhead rate is not given, definitely the cost will be given to you in the question. Just divide it by the actual. When you divide it by the actual, we give you the rate per one. Then, is this favorable or adverse?
Favorable.
Favorable.
I mean, adverse.
Favorable.
Favorable.
Ha. Now, wow.
It's favorable.
Who is the person that says is adverse? Let me use the person as an example now, so that you will know that it is favorable. Who is the person?
I'm the one.
Oh, Olaide. Okay. I don't want to use. Are you married?
Hello, sir.
How about to?
Sir.
What do you have? I'm coming. What do you have? Figure.
39,564. No, 39,564,000.
No, I have 600.
75 naira.
600.
600 what?
1,000.
Yeah.
Now wow.
600. 600.
Favorable.
Yes, 600, yes.
Now, please, as we are joking now, like, the classes, it seems we are getting it, right? We are moving. So, please, we should not over joke, right? Now, make sure you understand what we are doing. If you don't understand what we are doing, there is problem, right? Tolulope, quickly.
Okay, I just wanted to confirm the calculation you said we should do. You said 660,000, right? Divided by
Yes.
10.
Divided by 10K. 21,000 hours. The actual
Okay,
hours.
660,000 divided by 21,000.
Yes. That is what gives 31 naira
Okay.
4 kobo per
All right.
hour.
That's all, sir.
Do you
Yes, sir.
understand? Do you understand?
Thank you, sir.
Yeah, you're welcome. Next, variable efficiency
So I have a question.
variance. Ask your question before we move on, please. Quickly.
This variable production overhead 10 hours at 60 naira per hour that we use. Why is it that we didn't use these 10 hours?
Why will you use 10 hours? Where did you see the 10 hour? The 10 hour is what? 10 hours. Is the 10 hours a rate? Is it a
Okay, now
rate?
I get.
It is hours per unit, not
Okay, sir.
rates. Well, it is not rate. Did you see naira sign there? No, there's no naira sign. It is 10 hours per unit. If you work for 1 hour, 10 hours is for 1 unit. 2 hours is for 2 units is for 20 hours. That is how it
Yes, sir.
is. Do
Thank
you
you very
get?
much, sir.
Thank you. Variable efficiency variance. Don't forget, any day, anytime, efficiency measures is hours. So either you say standard, either you say actual, anyone you feel like you want to start with, you are good. So actual, right? Excuse me. Actual variable, let me just copy this now. I have efficiency here. So
Sorry, sir. Sir, this variance expenditure is 600,600.
600,600. Now, when you calculate this place, 660 divided by
Okay, we use this straight.
to 21,000. What do you have?
She's right. It's 600, 600. 600,
It's what? 600,
yes.
600. I'm coming. When you divide this, 660 divided by 21,000, what do you have?
31.4.
31.4.
Okay,
Just
sir, we will not
31.4.
approximate, right? We just calculate it straight, or what?
Yes. What do you have? Don't approximate. What do you have?
Okay, sorry.
Yes. What do you have? Give me the figure that you have.
31.42857,143.
31.42.
857.
857 143.
143.
857. Okay. Let's make it 3 like this. If you make it 3 like this, what do you have?
Sorry. That's 599,970.
Okay, you have 599,970. So we add
Oh,
another
okay, sir. The thing is, if you calculate it straight without approximation.
straight. I know. Yes. This is what we do. See, this is what you will do. Now, this is what you do. You just pick the first figure and use it to compare. You just calculate it straight. Do you get? You first of all just keep the figure one side. So when you should keep the figure one side, you look at it, you compare it. Then when you divide, you just minus and multiply straight. Do you get? Although if you still have 600,600, the examiner will still mark you. Right? It is not that you are not correct. Do you
Okay, sir.
understand? Do you understand? So you can just do it straight. 660 divided by 20. What you have, you look at it. Okay, is it favorable or adverse? Minus 60 times 21,000. Put your figure. Do you get? So standard variable overhead hour minus actual variable overhead hour times standard rate. So what is the standard variable overhead hour? This is hour now. What is the standard? What is the standard variable overhead hour? What is the standard?
31.4.
Where did you see 31.4? We standard variable overhead hour. Standard. Just like the way we have
10
standard
hours.
rates.
10 hours.
What is this? 10 hours,
Okay, 10.
right?
Now,
10 hours per unit. Now, let me put it here. Minus, what is the actual variable overhead hour? What is the actual variable overhead hour?
1 hours, 21,000.
Yeah, 21,000. Now, you can see in this question, we are not given, because variable overhead make use of efficiency, make use of hours, right? Right? Measures what? Hours. Sometimes you may be given variable overhead hours. If you are given variable overhead hours, please use. But if you are not given variable overhead hours, use the labor hours and do what? And move on. Let me say this again. If you are given variable overhead hours, use. If you are not given the variable overhead hours, please use the direct labor hours and move. Right? So, excuse me. So, we can ask your question, please. So, it is 21,000 hours. If you have question, ask your question. Now, you can see that I'm coming. You can see that this is 10 hours per unit. You can see just like what I've been saying, just like the way we did efficiency. Is that not so? You cannot compare 10 hours per unit with actual hours, actual variable overhead hours of 21,000 hours. Is that not so? Now, standard, your standard will have element of actual. Is that not so? So we now say times 2,800. You can see the 2,800 is what? Is the unit. You can put it in your own formula and say, okay, standard hours per unit times the actual unit minus the actual variable overhead hour. If the actual variable overhead hour is not given, use your labor hours and you move on. Right? So, I'm coming. So, what is the standard rate for variable overhead? Variable
60.
overhead, variable overhead standard rates is 60 naira per hour. So when you multiply this will be 28,000 hours minus 21,000 hours times the 60. I'm coming, the person that have question for me, right? Just chill. So what do we have? Is it favorable or
420
adverse?
favorable.
Favorable, 420.
So what do you have?
20,000.
What do you have? 420.
120,000.
Class, I hope you have taken note of what I've explained here. What I explained here, right? Should, in case the actual variable overhead is given to you in the question, please, I beg you, use it. But if it is not given, just use the labor hour, actual labor hour. Then you move on, please. Now, this is favorable. So you can unmute your mic and ask your question quickly before we move to sales variance. Mute your mic.
Okay, sir. So I just want to ask, because sorry, I was not in class from the beginning. Is it that whenever we are calculating anything efficiency, either it's labor efficiency or variable efficiency, anything we use, it
Anyone.
has to be labor. That's the figure we have for labor in the question is what we use.
Yes, but you could see that the standard variable overhead is different from the one of labor. Is that not so?
Yes.
Is it not different? Or this question is they just give us, it's just a coincidence, right? The standard variable overhead hour may be different,
Yes.
right? It's because this question is just like, okay, they just do it like that. Do you understand? But efficiency measures hours. Hours. Do you understand? Anything efficiency is hours. Do you
Yes, sir.
understand? Any other question, please?
Class ends in 3 minutes, sir.
Class. 1. 3 minutes?
Yes, sir.
Okay. I know. Tolulope, welcome back. I know she will tell me that the class, the call will end in 3 minutes. No, unlike